Welcome back to Real Estate Radio TV, the commercial real estate focused media for a new interview. In today's interview, we have the great honor to welcome Chelsea Mandel, founder and managing director at Ascension Advisory, a corporate real estate advisory firm focusing on sale and leaseback transaction, as well as lease restructuring services for business owners and financial sponsors. In today's interview, we are going to discuss many interesting topics, including the current dynamics of the leaseback sector in comparison to other commercial real estate sectors, the confluences between the capital markets and the leaseback momentum from an operator perspective, how regions comparing to one another, and successfully orchestrating a sale through the sale and leaseback model. Without further ado, Chelsea, how are you today?
I'm good. Thanks so much for having me.
It's a great honor. Before we dive in and tackle all the great topics I've just mentioned, I want you to give us a brief introduction of yourself, your business background, how you came to create Ascension Advisory, and really the type of services that you're offering for your clients.
Yeah, happy to. I'll start with Ascension. We founded the company just around 2 years ago. And just like you mentioned, we specialize in corporate real estate assignments, specifically focused on the sale leaseback world. So, working with both business owners and financial sponsors, helping them either unlock capital that they have, already tied up in owned real estate assets that they could then redeploy into, any higher and better use for their capital, as well as working with sponsors that are acquiring businesses where the target has an owned real estate component. And in that situation, typically we're setting up the sale leaseback as acquisition financing, where the sale leaseback proceeds go directly into the cap stack at closing, and our sale leaseback, advisory services are really helping them be able to put together the full cap stack to complete that transaction. And so, like I mentioned, just about 2 years old. Prior to starting Ascension, I was in the same, sale leaseback world on the advisory side working at another company. I was the top producer at that company. I did about $1 billion in sale leasebacks before deciding, to leave and start my own business. Prior to that, I was really more on the investment side. So I was buying sale leasebacks at a real estate private equity fund or platform called New Mountain Capital. I was the first employee there. We really started the sale leaseback strategy. So it was a sort of a confluence of factors. They wanted to get into the real estate space. They were an existing, very well established private equity firm. So really had all the credit underwriting and expertise already, at hand. And so it was a great way to put together, real estate kind of meets credit and start that strategy. So I was a founding employee on that fund, super exciting, was very entrepreneurial to kind of build that strategy and see it, grow. Prior to that, I was on the, traditional real estate private equity side, just doing more, value add type real estate investing at Starwood Capital Group. So that's kind of the background there.
Well, thank you for sharing all that. And the leaseback sector has received a lot of momentum this past couple of years. I mean, we've seen a pretty huge influx of capital coming from institutions. We've seen funds being created in that specific sector. As we are in a new cycle and we've seen tremendous headwinds in commercial real estate those past couple of years between some repricing events, drop in transaction volume, capital markets headwind. How do you see the current dynamic of the leaseback sector, maybe in comparison to other sectors such as offices, logistic? I mean, what can you tell us on that?
Yeah, I mean, yeah, obviously there's been a lot going on, in the last couple of years. I would say even really since like the big change coming out of COVID or coming into COVID. From our standpoint, the sale leaseback world is unique. It's not just a real estate investment strategy, it's really a corporate finance strategy. So for a lot of businesses who were seeing, much more challenges across their access to capital from their capital markets perspective, not on the real estate side, but how can they borrow, how can they finance, and provide liquidity to their business. The sale leaseback tool is really a good tool for them to tap into to generate that liquidity, especially when other, credit markets are tight. So it's not the same in terms of, the impacts that affect broader commercial real estate. You really have all of the, comparisons to just like corporate credit and the broader like capital markets for businesses and for business acquirers. So what I mean by that is, in the last couple of years, yes, real estate, commercial real estate broadly has been, hit pretty hard. I would say it's certainly, more of the headlines focused on office and hospitality and, really from other kind of more macroeconomic, risk factors or headwinds. So work from home, things like that. Whereas a sale leaseback, it's a strategy, it's not an asset type. So you can do it across any, single tenant, freestanding, mission critical asset, whether that's industrial, retail, healthcare, medical, et cetera. But over the last couple of years, it's actually been sort of an outlier in terms of, the market, yes, it's down. I mean, volumes were down, in our space about 40% in 2023. That would be a bigger, impact of the slower M&A market than it is of like I would say broader headwinds in the commercial real estate space. But the sale leaseback was sort of an outlier in terms of our model didn't get hit as hard when, interest rates skyrocketed and, you had all these rate hikes because it was more of like a relative, factor for these business owners of if my corporate debt has gone up, 600 basis points and the sale leaseback cap rates have gone up, about like 200 from a relative perspective, our strategy is actually still very attractive from a corporate finance perspective. On the flip side of that, if you're a real estate investor, you're not investing in office, you're probably not investing in hotels right now. There's a lot of broader, risk factors across those asset types. But the sale leaseback, again, it's really more of a credit strategy. So if you're, looking to buy retail, healthcare, medical, whatever it is, industrial in the sale leaseback space, your biggest, underwriting point, your biggest underwriting driver is really the credit of the underlying business and the mission criticality of that site to the broader company. And so even though interest rates are higher, making the borrowing costs for a potential buyer higher, yes, there were situations where you're seeing, negative leverage or just, neutral leverage, not getting that positive leverage like buyers are typically used to. They're still looking at the sale leaseback as sort of a safer model. It's a long-term fixed income, coupon generating strategy versus like more risky real estate investment types like development or value add, kind of more value driven strategy. So I do think a lot of capital from traditionally like other asset types or other strategies came into our space over the last couple of years because of that sort of flight to quality.
Right, and in commercial real estate, I mean, the main topic that we've seen over the past couple of months is repricing events. I mean, we've seen cap rates skyrocketing, buyers asking for more yield. So have you seen that happen also in the leaseback sector, and also to what extent maybe compared to other sectors?
Yeah, I would say in our space, cap rates haven't skyrocketed. They certainly were going up. I think, they're starting to come back down now that we kind of get into 2024 and, rate cuts on the horizon. But over the last, couple years, what used to be maybe like a 5 or 6 cap is now more like an 8 plus. So you're not seeing the same repricing from like a broader interest rate perspective, the way that, benchmark rates and lenders have repriced. You haven't seen cap rates reprice to that extent. And that's, again, why I say, like, from a relative cost of capital perspective, I actually feel like the sale leaseback has gotten more appeal and more attraction because those rates, while they've moved, they haven't moved in tandem with interest rates broadly. Today, I would say, again, like deals that say it was a 6.5 cap in, 2020, now you're probably looking at like an 8 cap. So the differences just aren't as aggressive, maybe an 8.5 cap.
And like you mentioned, the leaseback sector is really seen as a credit alternative for financing for operators. I want to get your thought because leaseback includes all the asset type we could think of. Have you seen maybe a higher momentum from financial sponsors to focus in one particular asset class, whether it be industrial, life science, or retail, or really it's been all across the board similar?
Yeah, it's a great question. And we actually just released our like private equity survey findings from 23, which did show the majority of sponsors are still thinking about the sale leaseback very much tied to the industrial asset type, which is fine and great. And we do a ton in the industrial space, but we're still always trying to push that this isn't just an industrial strategy. We can just as well do a sale leaseback in, distribution centers versus manufacturing. It could be medical office. These are healthcare, clinics, behavioral facilities, restaurants, auto retail, car washes, gas stations, dealerships, et cetera. There's so many other asset types that are not necessarily industrial where the sale leaseback tool works great. I think it's a little bit of a red herring to say, sponsors are focused on industrial sale leasebacks. I think it's kind of the reverse. I think it's the fact that sponsors, a lot of our clients are focused on industrial businesses in terms of, their investment strategy on the M&A side. And because they're focused on a lot of industrial businesses and a lot of, the sale leaseback momentum comes again in tandem with the global M&A markets, I think that's why you're seeing more industrial from a asset type perspective for the sale leaseback strategy, because it is so interlocked with the private equity like M&A world, and that's just where those clients and those sponsors spend their time.
And like you mentioned, leaseback is often seen as an alternative way of financing, whether it be for corporation, institutions, or private equity firms looking at acquiring other companies. As we've seen a lot of capital markets headwinds with the rates going up and the less momentum from banks to finance, at least on a more conservative LTV ratio. Have you seen any confluences between those capital markets and the leaseback momentum from operators, from your clients?
Yeah, I mean, I would say, like, generally, I think it's been almost a positive. Like, we did a number of sale leasebacks this year with owner operators who were looking to refinance, floating rate debt that they had. And the sale leaseback use of proceeds was to pay down debt, to really strengthen the balance sheet and get their, corporate financing in line. So I do think part of, that kind of repricing or capital markets, dislocation, I think actually led to probably more sale leaseback volume, where a lot of groups were using this, like you said, as alternative financing or using the proceeds to pay down debt because those costs have gotten so high and unattractive to those, to those groups.
And since we expect that rates will stabilize and eventually come down in the upcoming year or so, I mean, what is your expectation on the short-term momentum from a leaseback perspective? Do you think we're going to see more deals coming into market, less deals? I mean, similar type. What's your thought?
Yeah, I mean, I think there's a couple of different factors. I think, interest rates stabilizing or potential cuts like they're implying, and hopefully those come to fruition. I think it's more of a domino effect. I think what that's going to do is that's going to really spur M&A to pick up, because you really saw I think M&A volumes were down like anywhere from 20 to 40% depending if you're looking by country or globally. But M&A volumes being down, what that means is there's a ton of capital on the sidelines. There's like, I read somewhere, I think like 2 or 3 trillion in dry powder for private equity firms, and all of that pent up activity or pent up demand is going to lead to more deal making this year, especially if rates stabilize, rates come down. That kind of narrows the bid ask spread that's been such a problem between looking at buyers versus sellers to create that deal activity. So I think as that all comes to the forefront this year, with all of that pent up demand, you're going to see a ton more activity. Global M&A volumes will pick up, and then as a result, like I said, for a lot of these sponsors, sale leasebacks are a type of acquisition financing. Because of more deal making, we should see more sale leaseback volume.
Right. And of course, I mean, Ascension Advisory, you're based in New York, mainly operating in the US, but like we discussed pre-interview, you're really operating on a global basis, specifically in the US, in Canada, in Mexico, in the European sector, if I don't miss any other countries. Have you seen any disparities, whether it be transaction volume, maybe from an operator perspective between those regions?
Yeah, I mean, and just to clarify, I mean, we're not, we are based in the U.S., we're based in New York, we do have offices, globally. I would say our volume is about 50% U.S. and 50% other, whether that's Canada, Mexico, or Europe right now. And yes, there are differences, there are disparities. I would say from the European standpoint, those sponsors were traditionally used to very cheap financing, with their bank relationships.
Right.
And so from that standpoint, when that, market sort of just became more difficult for all these reasons that we're talking about, I do think they started to look at sale and leasebacks, less as like a kind of financing of last resort or like a backup, but actually like bringing it into the mainstream and looking at, as a form of primary financing that has a cheaper cost of capital versus, the other sources that they were able to tap into. So in 2023, yeah, I mean, we definitely saw more volume coming out of the European markets than we had, in prior years. And I think a lot of the dislocation in the broader capital markets, was to thank for, from our perspective for that.
And in the European sector, I mean, any specific region, whether it be more Western Europe, Eastern Europe, South Europe, any more insights on that?
Yeah, definitely more Western Europe. I mean, country specific, a lot of activity coming out of Germany. We're seeing more activity come out of Spain as well. The UK, but it's always been pretty strong. But yeah, I would say those regions, Netherlands, from a country perspective, has been on our radar pretty busy as well.
And from an investment perspective, an investor perspective, I mean, when you take 2023 in consideration, which have been the most active investors? Is it more funds, REITs, private investors? I mean, what have you seen based on your clientele and your clients?
Yeah, I mean, in 2023, because of, the rate environment, it was definitely, from our view, working with groups that, we knew didn't have to rely on asset level financing that could be the most competitive. So we were working with a lot of, the public REITs that had access, to public available capital versus asset level mortgages, as well as private funds that at the fund level have access to like corporate credit facilities that they can draw on versus needing to put like in place mortgages on an asset by asset basis. So it was a lot of the same types of players, but really being like acutely aware where their financing is coming from.
And within Ascension Advisory, if I understand, you work both on the buy side and the sell side. And the leaseback sector, in its definition, it's a simple definition, but it's a difficult execution, we can say. So really, where are the keys, at least from an operator, from a seller's perspective, in successfully orchestrating a sale and leaseback transaction?
Yeah, so just to clarify, we only work on behalf of the sellers, so we don't do buy
Okay.
side work. Yeah, we obviously bring in buyers into our
Yeah.
process, and so we remain, really interlocked in those buyer relationships, but we don't represent buyers. We try and not ever have a conflict. So we only represent either business owners or those financial sponsors. And yeah, I mean, most of, the time, groups are coming to us or we're coming to groups, it's a lot of repeat business, but they're looking for either, looking to do a sale leaseback to, again, unlock capital, redeploy it, whether it's paying down debt, buying equipment, funding an expansion, or even just, paying a dividend to the sponsor, or they're actually looking to set up a sale leaseback that is going to help finance, an M&A target where that target owns its real estate. So it's important to use an advisor because, especially in the M&A side, when you have a quick timeline, you need that certainty of execution. We're going to work A to Z from the initial underwriting stage, putting together that valuation, talking through the lease terms, making sure, the company is comfortable with the lease terms that we're putting out there, whether that's the rent amount and the sponsor's comfortable with that based on what the ultimate impact is to EBITDA, the escalators, the term, making sure that the business from an operational standpoint, can commit to that site for at least the duration of that lease term, and understanding, all the other like provisions of a lease agreement, like expansion financing, alteration thresholds, assignment, change of control provisions, things that are going to actually affect both the business and the sponsor, making sure that they're, fully aware of what all that means and that we're really going to bat on their behalf to get them the most flexible, provisions along all of those different, types of or topics really. And so we work A to Z again from, that initial stage to the actual marketing of that process, bringing in investors, bringing in offers, running a competitive process to get those groups, bidding against one another so that we're making sure we're getting the best economics, the most flexible lease terms for our client. And then also once we're actually signed up with one investor, negotiating that lease agreement, on behalf of our client, again, taking all those different lease points, into consideration, making sure we're doing what's best for the actual operating company, and then running all the due diligence process from all the different, property reports, credit underwriting, et cetera, and then, all the way to closing. And we're 100%, compensated success based. So we have the full alignment, with our client, fully incentivized to do, whatever is best for the client.
Right. So really accompanying your clients from A to Z, and that's really your value proposition instead of maybe going through a traditional brokerage firm that will put the property for sale. It's really advising the client throughout the whole selling process, if I may say.
Yeah, and like we're not just sticking a property up on like, CoStar or LoopNet and hoping that it sells. We, like you mentioned in the beginning, we maintain really strong relationships with the investor universe, constantly knowing who's buying, what their financing looks like, what their cost of capital at that moment looks like, what their strategy, is how that changes and evolves, and who the new entrants are into the market. So we're constantly staying, abreast of who's actually the best buyer at any given point in time for any specific deal that we're working on. So we really, we run a very tight, a very competitive process to actually bring in the investors. It's not just putting it up for sale and seeing what comes in.
Right. Well, perfect. Thank you, Chelsea, for really sharing your knowledge with our viewers and listeners. Before we let you go, is there maybe anything else that we haven't touched on? Anything you wish to tell our audience before we let you go?
Yeah, I mean, I think, obviously now we're in 2024. I think we're going to see an interesting year. I think it's going to be, a lot of new dynamics as rates come down and the market kind of stabilizes again. I think groups, now that they've seen sale leasebacks, and even if they had to come out through sort of like financing of last resort over the last couple years, now it's in the mainstream. Our survey shows that groups are highly aware of the benefits of the strategy, both on the European front and, throughout North America. So I think in 2024, as rates come down, hopefully risk spreads tighten as well, and that means, lower cap rates. And so from a valuation standpoint, I think from looking at it from purely like for sponsors for financial arbitrage, what does that cap rate multiple look like versus their EBITDA multiple? I think you're going to see those, spreads really widen in terms of that arbitrage, making, the sale leaseback an even more attractive financing, potential for these groups.
Perfect. Well, thank you. We'll put your different contact information in the bio of the interview, as well as the different research papers that you've mentioned during the interview. If people want to check out, reach out to you, they're more welcome to do so. And in the meantime, until see you next time.
All right. Thank you so much.
Bye bye.